Hello everybody and welcome to the midweek market update from Smack the Markets for the 13th of February. Now so far this week the market conditions have been a little bit more favourable for trend following traders. We've had sort of direction in the markets that has lasted a little bit more than just a couple of hours or half a trading session, and we've started to see the formation of a few reasonable trends. So let's go and take a look at how our markets have been faring that we discussed on Monday. Now, if we come and have a look at the mini Dow future first of all, and we look at this on the daily chart, at the beginning of the week, the market was back here to 25,000, back at this level. As you can remember from the previous week, what we were expecting was, or looking for, a move from 25,000 up to 25,500, which was the next structure level on this market. It didn't quite make it last week. It sort of was a shade off that level before retracing back to retest 25. Now, this week, the market has rallied on, and sort of we're not halfway through the week yet, and the market has now tested 25,500 at that price point. So what now here on the US indices? Well, of course, always what drives these markets is news flow. And at the moment, we're getting some positive news flow through from the US with the positive reports back on the progression of the US and China trade deal. Also sort of positive reports back on the pending sort of shutdown of the US government version 2 that needs to be ratified by the end of this week. So far positive news on both of those fronts, which has certainly helped the index markets here to get up to these highs. So very much it's going to be how that sort of news continues throughout the course of the week, and how that gets confirmed as to how the momentum here in the markets continue. Certainly from a technical perspective, we can see on the 4-hour time frame that there is a couple of levels here that the market could reasonably retrace back into to find a bit of support. We've got 25,400 up here. Underneath there, we've got sort of like 25,200 for a retest. Either of these sort of areas, if the market does retrace this far, could act as significant areas of support, and the uptrend here still remains very firmly intact. As the market's reached a significant level at this moment in time, and it's in the context of being a little bit overstretched on some of these higher time frames, a bit of a retracement would be quite reasonable. So we've got these two levels here, which I'll be keeping an eye on for potential retracement opportunities back into these sort of decision points. And when the market gets to those, we'll be looking at how the market reacts from there. If the market's going to reject them and the uptrend prevails, we'll be looking for new longs. If the market breaks through these, then we'll be looking for trading opportunities intraday down to the next sort of decision point area. The overall trend, of course, still remains very bullish here on the US indices, and the market needs to really come back quite some distance, certainly back here past the sort of 24,900 area, before this sort of nice uptrend is taken out on these higher time frames. Now, if we come and have a look at the commodity that we were discussing earlier of the week on Monday, which is oil. Now, oil here has sort of played out sort of very technically to the levels that we have marked in on our charts. So we were saying on Monday that the $52 level here was the sort of significant level here on the market. There was other significant price points underneath price, right the way down to the $50 level, where there is sort of key decision points and potential turning points. Now, of course, what's happened since Monday is the market did manage to break through the 52 level. It didn't make it too far. It only sort of got down to 51.30, and it's bounced straight off that technical level, and now we're starting to get a push to the long side. So the 4-hour trend now is broken. The 4-hour trend is now sort of an uptrend. So we've got higher highs, higher lows. And the market, again, is sitting at some sort of technical levels. Now, of course, again, this is a commodity. It's being driven very much by sort of news flow and demand. There are oil inventories out later on today, and I think the how the results of those oil inventories play out will depend upon whether we can get a continued boost here in the price of oil. Now, certainly at the moment, the path of least resistance certainly looks to the long side, with 53.70 or 53.80 looking sort of like fairly well tested at the moment, and possibly if this breaks, we could see 54.25, and then easily, if this gets taken out, easily probably a push up to that sort of $55 level again. As we're looking at these higher time frames, the market looks sort of like fairly easy for a move up towards sort of 55, but higher than 55 really breaks into new territory. So for us in the trading room, we're looking at sort of trading opportunities in between the structure levels as the market defines the moves. Now, we were looking at our favorite currency market being dollar yen earlier in the week. We're looking for a move, if we recall, off the 110 200 level here. We're looking for a move up to the 111 level. The market's now sort of playing out pretty much as expected, and it's sort of well on its way up to testing this sort of 111 level. Everything's looking sort of quite neat on this on these markets now, on these dollar markets, for long moves. It doesn't matter which one we look at. If we look at dollar Swiss, we're still seeing sort of strong momentum above the parity level, and we're seeing some good sort of market structure as well. So if we come back to dollar yen, we've had a good move in the markets. So what now? If we just pull this down a little bit and start to take a look at the trend structure here, 110 was our big level. 110-200 was the minor level, with markets nicely clear of that sort of price points at the moment. We've got a good trend in place. At this moment in time, the market still looks good for a run up towards this sort of 111 level, and that's really sort of what we're looking for the remainder of this week. So, of course, what remains within this is that we need to see continuation strength in the US dollar, and we need to see continuation sort of weakness in the yen. And so far, we've seen a weak yen throughout the whole course of the week. And with the bullish momentum here on the dollar, we should be having the strengths and weaknesses in alignment to help this market follow through. So still looking for long opportunities here on dollar yen up to the 111 structure point. So that's where we are midweek through this week. I certainly hope it helps, and we look forward to speaking to you next time. Bye for now.